This voice is taken from an article with the title, How Does News and Economic Calendar Events Impact Currency Volatility?, which has been published on TRADERTALKSNET. News and economic calendar events can have a significant impact on currency volatility. The effects of news and economic calendar events can be seen in both the long-term and short-term movements of currency pairs. In the short term, news and economic calendar events can cause the volatility of a currency to spike, as traders and investors react to the news or events. In the long term, news and economic calendar events can have a larger impact on currency volatility. This is because news and events can cause major changes in the fundamentals of a currency, such as a change in the interest rate, or a shift in the supply and demand for a currency. These changes can cause a currency's value to fluctuate over time, which can lead to increased volatility. Major events, such as central bank meetings, economic reports, and political announcements, can have a substantial impact on currency volatility. Central bank meetings can have a large impact on volatility, as central banks are responsible for setting interest rates and other monetary policies. If a central bank announces a change in interest rates, it can cause a significant increase or decrease in the volatility of the currency they are affecting. Economic reports, such as GDP, employment, and retail sales, can also have an impact on currency volatility. These reports provide insight into the current health of the economy, and if the numbers are not as expected, it can lead to a shift in the demand and supply of a currency, which can lead to changes in its value. Political announcements, such as elections and policy announcements, can also have an impact on currency volatility. These announcements can shift the sentiment of investors and traders, which can lead to an increase or decrease in the demand for a currency. In short, news and economic calendar events can have a significant impact on currency volatility. Major events, such as central bank meetings, economic reports, and political announcements, can cause shifts in the demand and supply for a currency, which can lead to increased volatility. Traders and investors should pay close attention to news and economic calendar events in order to try and predict how they will impact the volatility of a currency.